What's up, guys? Welcome to a new episode of Founders Talk series. And today we are going to talk about angel investments. And first of all, let's define what angel investments actually mean. Kurt, from your experience and your knowledge, so would the famous friends, family, fools investments be as angel investments? And is there any amount that limiting angel investments, for example, like up to 1 million, or is just, the first pre-seed investment?
Sure. Well, that's a great thing to ask, as we've been talking about all the different ways to get investments into your company and how to grow and expand your business. So the friends and family investment can be considered angel investment. Actually, really, a lot of things can be considered angel investment. Usually, angel investment is the first investing that you're getting, the first funds coming into your company, usually from affluent individuals who are interested in supporting startups or entrepreneurs, usually by providing capital in exchange for some type of owner equity or convertible debt, which is very similar to the other types of investment that we've talked about. The big difference really is that these are usually the very first people coming in, and they are more willing to take some of these bigger risks. As far as amounts, that's another one of those things that can really kind of hit anywhere, depending on what the project is, how much you're actually looking to raise, and then also, what you're going to be doing with this capital and what they have available and what you're willing to give up. Because again, there's always going to be some type of exchange of ownership, control, something along those lines in exchange for this capital. So the advantage of these angel investors is that they're usually willing to invest more in the passion or the idea of the founder. So they won't be often looking for really detailed financials or really detailed go-to-market plans, because they're often just like, hey, this is a really neat idea. Let's support this. Let's help it grow. And it kind of falls into a category that they may normally be working within. So yes, that could be friends and family. It could also just be someone who does this normally.
And what would be the typical risks for investors with angel investments, besides the obvious one that at the idea stage many companies fail? But if the company make through to the first round or the next round, what would be the risks for angel investor in this case?
Well, you really hit the big nail on the head there with saying that the ultimate risk is in the early stages of this being a startup. Is it going to continue? Is it going to have success? And that's the biggest one. The entire investment can be lost. But let's say it makes it beyond that point. That's really going to depend on a few things. But some of the big risks, obviously, are your investment being illiquid, meaning that you've put money into a business, a startup, but you really have no clear way of getting it out or timeline for getting it out. So that may be a startup that by year 2 or year 3 is actually making money and they're doing well, and you've got, let's say, $500,000 into it as an angel investor, and you might not have a clear path for getting that paid back. Whether it was done as a equity investment where you might now be getting a share of the profits. Profits might still be very low, meaning it's going to take years for that to come back to you, or whether it's convertible debt or some type of regular debt, that could just be sitting there for a while as this company is growing. So that's obviously a big risk. There's also the risk of dilution. When you come in early in a startup company, that company is going to have to raise more capital later on. And what does that look like for you as the investor? And this is the same thing, what does that look like for the original founders? Everyone is starting off with, a piece of the pie. But as more people come in and as more funding is raised, that dilution is going to be cutting everyone's slice just a little bit smaller. So those are some of the big risks that you might have involved being the actual investor yourself, the angel investor yourself. But hopefully you've got a good relationship with the founders, and that you really believe in the direction that this company is going, and that you're eventually going to get to some type of exit strategy.
So let's flip a little bit on the side of founders. So are there any typical risks with angel investments for the companies?
The risks are similar to other types of investment in that, angel investors are usually going to want some type of control. Every now and then you get some that are, completely silent. They're just like, hey, here's some money, do with it what you will. I'd love to get it back. If you can find one of those, great, good for you. I think they're far, far less common, but more common is someone coming in early on. They're looking for some type of control in the direction that the company is going. If you're in that early stage, if you have a board, they may want a position on the board, or they may want some type of equity that gives them a either controlling interest or an influential interest, where they may not necessarily control things because there are other people involved, founders, co-founders, and other employees, but at least they have enough of a voting equity position that they can help steer the direction of the company to help protect their own investment. So that's something that you'll have to be aware of as the company, risks that can come in there. You also have the risk of disagreement with these people. Once they have some type of interest that can sway the direction of the company, they may try and take it a direction that you may not want to go, because they're ultimately trying to protect their investment. You're trying to grow the company, and sometimes those things will conflict. So I think it's important to be aware of that. And they may have conflicts with other investors. There may be new people coming in that they might have a history with, or maybe they just disagree with that next investor coming in and how they might change the direction of the company and influence the next set of decisions. So I think it's important to keep those things in mind. Keep in mind how things can be complicated. The more people that you have with a say, the more complicated making what should be or could be simple decisions difficult. So that's one important aspect to always watch out for.
And in many of our previous videos, we've been talking that ideally the company or startup should be self-funded for as long as possible to keep as much equity as possible. But on the other hand, we see that investing in the company can bring a lot of value besides the money, like connections, new investors, new customers, and vice versa. Is this also applies to investors? And, does the benefits of having angel investment or this initial funding is overweights the fact or the option of being self-funded?
Yes, I think in short answer, angel investment is often very good, or any type of investment for that matter. There's not a huge difference in many ways between angel investment and other investments, especially when considering the benefits for your company as well as the potential pitfalls for the company. The big difference with angel investors is they're willing to come in at a stage where there's more risk and there's more uncertainty in the future, as well as giving more favorable rates and things like that. But so the big benefits that you often get are the connections, the network. Since these individuals are often going to be affluent individuals that have other connections or other experience in your space, they can open up doors to better partners, better vendors, new ideas, better employees, or senior level management to come in and help guide the direction of your company, as well as opening up the door to additional funding. A lot of these people, if they get into something and they really like it and they see that you're executing well, they can reach out to their network and be like, hey, I'm involved in this project. I think a lot of you might find it very beneficial as well. So, come and talk to these founders, see what they have to say. And if you like it, let's see if we can do something. So that's some of the benefits, especially, when thinking on the self-funding route. While you may maintain full control, you can really limit your growth potential. So, you're always kind of weighing these options back and forth for how much control do you have? How much money are you taking in? How quickly can you grow? Because all of this is a game of survival, and the fastest way to do it may not always be the best way, and sometimes the best way isn't the fastest way. These things don't always directly correlate with each other.
So guys, good luck with your fundraising. If you enjoyed this video, please support the channel with like and subscription, and let us know in the comments below what else you would like us to highlight. See you!